Welcome to Sunday Trader Talk Radio. This is Alexis over here, and I am going to have a sneak peek at what I will be looking at for the next couple of weeks. Now, I am looking at Swiss dollar over here as a COT summary. Now, this website is cmbgroup.com. They have a very nice chart looking like thing. So I am kind of looking at being a little bit bullish on the Swiss in the probably last month of the trading year of 2023. And mainly because the franc still has a safe haven status. All right, now, this reputation of a safe haven has been acquired over decades, and the investors' desire for this currency stability is normally expressed in their foreign exchange investments of the Swiss National Bank. Now, through the first quarter of last year, the Swiss National Bank actually acquired foreign currencies worth over 900 billion francs to alleviate appreciation pressure on the domestic currency. However, since then, interest rates across the board have risen faster than in Switzerland, and the Swiss National Bank has been able to reduce its foreign currency holdings by more than 100 billion francs. All right. And what we are looking at is, as long as we are having a little bit of turmoil in the world, a little bit of uncertainty due to, the conflicts that's going on, there will be a slight desire for a stable currency, and the Swiss is still my pick as a safe haven currency. Now, if you look at the Swiss statistics over here, you can actually see that over here, you can actually see that it has really low interest rate 1.75, very low inflation 1.7, decent unemployment numbers at 2.00. And now what concerns me for the Swiss is that it is quarterly GDP figures are kind of flat. All right, over here it says that the Swiss GDP has stopped from the previous quarter in the 3 months leading to the June of 2023. It missed estimates of a 0.1% expansion and holding the 0.3% increase from the quarter ending March. So this is pointing to a renewed period without growth for the Swiss economy, and is suggesting that the Swiss National Bank's historical tightening campaign is transmitted to a greater extent halfway through the year. Now, this website is tradingeconomics.com, and it's just giving a narrative of where the quarterly GDP figures are for the Swiss. Now, being a safe haven currency, being a kind of more stable currency, I would like to kind of be still on slightly bullish on the Swiss, bearing in mind, again, we are entering into the last month of the trading year, which would give us slightly less volume and liquidity in the markets. So let's explore the couple of Swiss currencies that we are kind of looking at. Now, Aussie Swiss, not quite looking at Aussie Swiss right now, because the Aussie is doing pretty well fundamentally, and it has a bit more potential for upside. Therefore the purpose of kind of trading fundamental analysis is to take a weaker currency and pit it against a stronger currency, right? So I'm trying to look at weakest versus the strongest, the first and the last. And Australia is doing pretty okay on the chart, so I'm not going to look at Aussie. All right. CAD Swiss. Now, CAD Swiss is a bit more interesting. To look at CAD Swiss, we have to look at oil. So over here, oil prices, you can see it has been on downward trajectory since September. And this is actually more or less in line with the seasonal shorts of the year, all right? So seasonally, in the last quarter of the year, there is a weakness in oil, and this has kind of continued playing out. But of course, coming, I think, end of December, somewhere in mid-December, end of December to beginning of January, we should have oil starting to become bullish again based on the seasonal charts. And that is where we should be a little bit careful of shorting oil at this point. So if oil still continues moving towards the downward, still has a downward trend, then I think we do have a little bit more room to play for the CAD Swiss. Now, my only concern for the CAD Swiss is that it is really, really overextended. You can see it is broken previous lows of almost all time. All right. So what that means to me as a trader is that there's not much space going downwards. But if it appears on a trend trading strategy towards the downside, I am just going to take it, but of course at a smaller risk. All right. Now, looking at Swiss yen, we have been riding the Swiss yen longs, for quite some time right now. Do I think there's more upward trajectory? While I wasn't sure in the last couple of weeks, prices has continued to surprise me and has broken above its highs. So once again, I'm not sure where it's going to go. There is a high level over here, a recent high. Now, if price continues towards the upside, breaking above this high, then potentially there might be still a tiny bit more room on the upside. Again, I'm very, very aware, very mindful that we are very, very overstandard on the Swiss yen. Now we are entering into the last month of 2023 again, and in 2024, there is speculation that the Bank of Japan might start to increase interest rates. Now it's a big question mark so far because news coming out from the Bank of Japan is still saying that they are going to wait and see. All right. So a lot of false starts have been happening. People are trying to buy the yen based on what they think is, the Bank of Japan's intolerance of where the yen levels are. So Swiss yen, well, there's small room top side. I don't think it should warrant much risk to be played on it. All right. So maybe small risk just to see whether it could hit towards the top. Swiss yen traders should do a little bit better on the smaller, shorter time frames. Now, if we look at Euro Swiss, again, Euro is doing pretty well on this statistically. It has found strength across quite a number of currencies. So Euro Swiss is not the currency I want to look at. Same thing for Pound Swiss. Again, if Pound Swiss can stay above this resistance level, then I think there is potential to short it. But again, not very much. Very simply, it's because I think if you look at pounds inflation figures from the last reading, it has improved by almost a whopping 2%. All right. So this tells us that maybe the pound's weakness is going to has more or less stabilized, and we should find a little bit of pound strength coming back in. So pound Swiss not a fan. Kiwi Swiss, however, now Kiwi Swiss is something a little bit more interesting for me. If we look at the Kiwi figures over here, if you look at the Kiwi figures over here, it's got 5.5% interest rate, which is exactly the same as the US, but inflation is 5.6%, almost a 2+% higher than comparatively with the US dollar. 3.9% unemployment. And what is interesting for me is the unemployment rate has been tracking towards the upside. All right. So it's kind of worsening in that sense. Now, currently, the GDP figures is 0.9. What I am looking at is, since GDP is a slightly lagging indicator, if GDP falls off in the next reading, I think it should confirm our soft bias for a Kiwi. So I am slightly more bearish on the Kiwi. Again, very mindful that it's all very near the trading bottom. So if you look at the weekly time frame, you can see this is a weekly time frame. You can see that the Kiwi is trading at an all-time low compared to the Swiss. So I don't know how much more place it has to go downwards. The only place I can see is the previous lows at this 0.52 level. Of course, I would like to see whether we can take it towards there. And if price continues to find resistance at this level over here, let me just put a line across. Okay, if price continues to find resistance at this level, then a possible target at 0.53, very, very thin, small trading target, and maybe 0.52. So not much room to go downwards, but definitely not a currency I want to go long anyway. So my bet for the Kiwi Swiss is to the short side. Now, based on the commitment of traders, can see a little bit more Swiss longs being held. This brings me to dollar Swiss. Very nice downward pressure to the downside. We might face a little bit of a retracement, but what I am keen is to see whether we can kind of fill up this level over here. All right. Now there is expectation that the Fed will be decreasing its interest rates in 2024, and this has caused the dollar to weaken quite a little bit. I don't know how long this weakness of the dollar should go. We are looking, really all eyes are on the Fed right now. But for dollar Swiss, at least, we still have a little bit of propensity to the downside. Again, that's all I have for this week. But one gentle reminder is we are entering the final month of the trading year. So do trade safe and take a holiday if you guys can get one. So cheers everyone and take care. That's all for me. Bye-bye.